The broadcast is now starting. All attendees are in listen-only mode.
Okay, let's do this. Okay, good afternoon, everyone. It's CFRN Thursday, and it is January 17th. It's about 10 to 1, so I'm starting the program early just to so I can knock out the disclaimers that I have to present before starting the program. Okay, so the game plan this afternoon is to go over the CFRN trade setup in slow motion. Okay, so if you're brand new, this is going to be a great syllabus for you to lean on. So when you enter or go into the training room, you kind of have an eyes wide open approach, and you kind of understand what the heck's going on as Michael is entering and exiting trades. Okay, some things are happening fast in the room. You got a set of indicators that you're not familiar with. The markets are moving. Like I said, Michael's trading off of a DOM. So there's a lot of moving parts that are going on. So the idea of this 1 hour session is to kind of slow it down so you can absorb what's going on in the training room. Okay? If you are already a CFRN member and you're hanging out this afternoon, that's great because this is going to give you some more screen time. You'll get to learn the personalities of the markets that we're trading. You'll get to ask questions and see things and, kind of listen and see how I kind of approach the market using the same trade setup. Okay. In the next hour, I will go over some of the setup, but I also will make some observations. Throughout the years, I've gotten screenshots and critiqued some emails and trades that people have taken and sent to me. And there's seems to be, when someone's struggling, there seems to be, a common thread why people get stopped out or what have you. Okay. So as they pop up, I'll share those with you. So in other words, I'm going to try to keep you out of those traps and point them out to you. Okay. So the idea is maybe to open your eyes open to those things as they come, when they're hitting us in the face in a live market environment. Okay. So, again, it's good that you're hanging out because I know that you're making a go at this and you want to be successful. So I'm glad you're here. All right, a few things. This is live. I am watching the phones and presenting. So if my phone buzzes, I'm gonna put you on hold and hit the mute button just to give you advance notice. Okay. Ask questions. I have a question box that'll pop up. So if you have something that's bothering you, or you have a question about something, or if I'm not clear about something, pop it in the question box. Okay, I'll address it, and we'll knock it out. Okay. Let me close my email so you don't see every email that pops in here. And this is being recorded. So if there's halfway through, if you need to step out, just so you know, tomorrow I'll get the coding done and put it out on YouTube. So you can review the information, and if you missed half of it, well, you can follow up on YouTube. The idea is to go over the trade setup, okay, and then take the same trade setup and go inside of the market and look for those opportunities. I'm going to, when they present themselves, I'm going to highlight them, but also I'm going to go inside the DOM and actually execute them, okay? So I'll show you how to enter the market in the DOM, okay? This thing here, if you're brand new, this is called the depth of market, okay? This is where we're buying and selling, okay? If we get a buy signal, we're going to left click in the green, and we make money as the market goes up. Okay, if we get a sell signal, I'm going to left click in the red, and we make dough if the market goes down. Okay. And then along the way, you'll see me move the stop, move the stop, move the stop. So I'm going to show you how to enter it. I'm going to show you how to place a bracket order. And I'm going to show you how to move the stop down and then ultimately cut the trade loose. Okay. So we'll do that, and like I said, as the market's moving. All right. This is DT Pro. This is the platform that I support. What you see in front of you is the indicator set. It's already built into the platform. All you have to do is do a few left clicks, and you have them up and running. So it's pretty high speed, and the platform has all the bells and whistles, and the platform is free. So the only thing that you're paying for is the data. And no matter where you're trading, everyone's paying for data anyways, in some form or fashion. Okay. So that being said, I'm going to go over the disclaimers that I have to knock out before I present. So again, I don't like to just throw them up and say, hey, take a quick look at it and then shove them back under the blanket. I'll go over it because over the last almost 25 years, I've seen the good, the bad, and the ugly. So I do like to talk about this. And the disclaimer really is meant for those guys that are really brand new to our space. Okay. It's meant to scare you. That's why we talk about it, because if you don't have a trading plan, if you're not using stop losses, if you're not watching over your account or you're not watching the markets, if you're not engaged in what's going on or, in tune with the news and stuff that's going on around you, this disclaimer will hit you right smack dab in the face. And the disclaimer basically basically says, look, once you enter into the futures market, you can lose everything and some in your trading account. So if you open up a $5,000 account, you can lose that $5,000 and some and owe the house if you don't have, like I said, all those things in place, a stop, a trading plan. You're not engaged in what's going on. You're not watching over your account. Okay. So trading futures is risky, and it should be risk capital that you're trading. That's money that you can afford to lose. I know nobody likes to lose, but it can't alter your lifestyle. So if you lose the $5,000 and you can't pay your bills and what have you, well, you should be trading futures. Okay, it's got to be money that you can afford to lose. It doesn't change your lifestyle. Okay, so that's a disclaimer in a nutshell. Normally, by the time that people get to CFRN, they've already been to this guy, and they've learned this setup and that setup, and they're pretty numb to the disclaimer because they've been beaten up pretty good and bruised. So by the time they get to CFRN, this disclaimer, has kind of worn them out a little bit. Okay. That's the best I can tell you. Really, it's, in the end, if you're going to go down the CFRN path, you're really going to have to put the time into it. Okay. So going to this webinar that you're here today, going inside the training room, putting trades on, taking them off, asking questions, all that stuff is going to be important to your growth and your success. Okay. If you're not doing that, if you take the lazy route, which normally, I don't know what it is, but human nature, generally speaking, people are just lazy. Okay. They would rather just have someone else do it or push a button, but not spend a lot of time. That's just from my experience being on this side of the desk. People just are generally lazy. So you really need to put the time in. Okay. That was the long-winded explanation of the disclaimer. Again, you can lose everything and some in your trading account if you don't have a trading plan, if you're not following rules, if you're not watching over your trading account. Okay, all those things that I highlighted are important. And the benefit and the good thing about it is, with CFRN, you do have a trading plan. That's what we're going to go over this afternoon. you are going to use a stop loss, right? Every trade has an 8-tick stop attached to it, okay? You're going to use aggressive risk management, right? You're going to, if the market moves 4 ticks in your favor, you're going to move the stop to your entry or your break even. Okay, there's going to be an exit strategy. You're looking at the market under a microscope because you're on a 4-tick range chart. So that means you have to be in front of the screens. You have to be engaged in what's going on. And if something does happen, okay, you do all the right things. You place a stop. You're following the rules. You're in front of the screens. If all fails, okay, and that means your stop just got jumped because of some crazy news, at least you're in front of the market, okay? At least you're in front of the DOM here, this tower. If all fails, you can hit this hot button here that says exit at the market and cancel any outstanding orders. Get the heck out of Dodge. All right. All right, that's it. I'm going to quit talking about that point. All right, so that's the disclaimer part of it. The next slide is going to be, come on, there we go, is my relationship with CFRN. All right, there is a line between us. Okay, CFRN is the mentor. They're the educator. It's their trading tools. It's their indicators. Okay, they're a third party. No, they don't work for Daniel's Trading. No, I don't work for CFRN. We have a relationship, okay? And the relationship is this. Their indicators are coded inside our platform. And all you have to do is download them, okay? So CFRN is the educator, third party. They're the mentor. That's their trading tools. It's their indicators. I support the platform. I support the brokerage, okay? If you have questions about the setups, you have questions about the platform, downloading it, all that other good stuff, I can take care of it. Okay. If it's a hand raise that says, hey, I'm going to be a CFRN member, who do I pay? How do I pay it? That dialogue is between you and them directly. If it's something on their website, a video, the Thursday night workshop, it could be, Telegram, right? Telegram could be something about Telegram, the daily double, the concierge trade alerts, all that stuff. You would contact them directly. Okay. A lot of times, if Dwayne's on the radio and Mike's running around, a lot of people will contact me. I can answer most of the questions. They just know that I'll pick up the phone. So if you call, I'm the guy that's going to pick up. So it's nice to have that flexibility to lean on somebody. So if I have a question, you'll get a live body on the other end of the phone call, especially that knows what you're looking at and the platform that you're using and the setup that you're learning. I know it. So it's comforting to have that relationship. Okay. So again, there is a fine line. And that's why we have to disclaim it, okay? So that's why I'm talking about that, all right? As people pop in, again, I encourage you guys to ask questions along the way. I'll address them. And like I said in the very beginning here, the idea is if you're brand new, this is going to be a great template for you to lean on because we're going to go over the traditional slingshot setup that's been around from day one and the one that Michael uses in the training room every morning, okay? And if you are a CFRN member, okay, I'm going to go over the setups. You'll get some more screen time. You'll get to ask questions, and we'll get you on the right path, hopefully, okay? So that's kind of the game plan. All right, so with that said, I'm going to kind of get into the nuts and bolts of this thing. This is good for the new guys, okay, guys that are on the trial, just learning, because I'm going to break down what he goes through step by step here, okay? So the first order of business is the time frame. So we're on a 4-tick range chart. So if you have DT Pro, what you're going to do is A lot of times people are on a time-based chart. They might be on an hourly, might be on a 5-minute, whatever the case might be. The way to get to the 4-tick range chart, next to the time frame, just hit this drop-down box. Go down to Custom and left-click. This box will open up. What I want you to select is Range Bar and make that one look like a 4. Okay, if you select OK, this is the gold for February on a 4-tick range chart. The height of each candle is 4 ticks. Okay, some look smaller, some look larger, but the bottom line is they're all the same height, 4 ticks. Okay, one of the big traps that people fall into, they come down to Custom, but they select Tick Bar. They turn that 2 into a 4, and the chart looks goofy like this. Okay, if you're looking at nonsense like this, you fell into the first trap. So you should be on a range chart. Okay, you could tell the big difference there. Okay, the range bars are a lot smoother. Okay, now one of the benefits of Michael using the 4-tick range chart is that he can be predictive, right, or proactive in placing his orders. So a lot of times what you're going to do is you're going to hear him call out the highs and the lows. Okay, the best way to describe it is, or the best way to execute those is this. When he's calling out the highs and the lows, he's getting ready to place an order. Okay, if you just add or subtract 5 from the high or the low, that is the price that you're going to right-click on or buy or sell on a stop. Okay, so let me break that down. On this candle, if the low is 1291.40, then the high of the candle will be 1291.80. Okay, so if you're going to be proactive and get long on a stop, if you add 5 ticks to it, you're right-clicking at 1291.90. Okay, so you notice I'm buying one at 1291.90 on a stop. Okay, that's what that means. Again, on the flip side of that, if the high is 1291.70, then the low has to be 1291.30. If the high is 70 and you subtract 5, well, if a sell signal pops up, you're going to right-click in the red, because that's where you click to get short, and your magic number now is 1291.20. Okay, so if you add or subtract 5 from the high or low, that's the order that you're going to place. Okay, so you don't have to do any math. All right. He does that a lot of times. In the beginning, when it kind of first started, guys were asking, "Well, heck, how did you get into that trade? It happened so fast." Or how did you get long or short? It's because he's buying it, selling it on a stop. So the market takes off. Okay, the market takes off. He might be getting in up here. The market's down here, right? The market blasts off, the market's going to stop him into the trade. Okay, it's going to enter him into the market as the momentum kicks up. And conversely, if the market is setting up in a bearish situation, you might be selling it on a stop underneath the market. Well, if the market breaks down, it's going to stop him into the position. It's going to get him on weakness, and so he'll go with the momentum. Okay, so that's what he's doing. All right, and what he's also doing is he created a bracket order. So this little Tinker Toy triangle here, all right, that's a bracket order. I'll show you how to do that. So stand up parade rest on that point. We'll go back to that when we get into placing trades, okay? So run a 4-tick range chart. That's the bottom line, okay? So you guys know how to get there? That's where we start. All right. We're going to work on the top portion here of the chart. So here's some buzzwords, things you'll hear inside the training room. The green line here is referred to as the BBC. That's short for bullish and bearish cross. Okay. The MA1, or that red and blue line, let me highlight it here. The red and blue line here is referred to as the MA1. Okay? Together kind of gets us into step number 1. All right? And here's step number 1. When the MA1 crosses the BBC, okay, it does it here, and it does it here. Okay? That is the first step, or the bullish or bearish cross that you're looking for. That puts everything in motion. Okay? If the MA1 is red, you're looking for bearish setups. Okay? If the MA1 is blue, well, then you're looking for bullish or buying opportunities. The one that's highlighted here, that's a bearish cross. All right? So you're looking for sell signals or bearish setups. Okay? Note, I didn't say sell it here, buy it here, sell it here. I said we're looking for shorting opportunities, okay? We're looking for the market to do step number 2, which is the normal thing for the market to do. That is, after the cross, it's normal for the market to gravitate toward that green line or that BBC. That's the normal thing for the market to do. That is what we're looking for, okay? What we're looking for is the market to touch the BBC as it does here, but then closes in the direction of the trend, okay? This arrow here highlights step number 2, okay? So again, after the cross, this is a bearish cross, so we're looking for shorting opportunities. We're looking for the market to do the normal thing, which is pull back to the BBC, touch it, and then close in the direction of the trend. That is step number 2. Okay? After step number 2, then our eyes are going to gravitate toward the slingshot or the oscillator portion of the chart. Okay? And this is basically where the trade exists. This is where the setup starts and ends. Okay? In the slingshot. All right? So again, some more buzzwords. This red and blue line is referred to as the cycle. Okay? The green line, nothing fancy about it. It's just referred to as the green line. What's important is the space or the separation or the divergence that Michael refers to in the training room. This separation is called divergence. Okay? Michael refers it to, he'll talk about it as separation now. We called it divergence. That seemed to confuse a little bit, confuse some people. So we're going to call it separation. All right? But here's how that works. So I'm going to break this down. Basically what this is saying, this cycle, that buzzword here, right? It's red. Okay? This is saying we are in a downtrend. The momentum is bearish on the 4-tick range chart. That's what this is saying. Okay? This market action here, the normal market action where it goes up to the BBC and then closes in the direction of the trend, okay, coincides with this action in the green line. Okay? What the green line together with the market action is basically hinting that that is basically a little hiccup in this ongoing downtrend. And when this is present, this market action is present together with the separation in the cycle, your next course of action is to go inside the DOM, okay, the tower, this thing here, okay. We go inside the DOM and basically get short, okay. There's no other filtering. There's no other guesswork. When that's present, we just get inside the DOM and execute a trade. We take action. That's what we're doing, okay. The reason we do that, okay, as I said earlier, the trade setup is down here. This is saying, look, we're in a downtrend. This is just a pull away, okay? And this close here, we need to get short, right? What we expect to happen is the green line to ultimately come down and close the gap into the cycle. That's what we expect to happen. Price action wise, we expect the market to make a new pivot low. All right? It's at this point here, okay, when the green line is going into the cycle, is when we close the trade out. That's what we do. Because guess what we expect to happen? The green line to pull away again, and then pull away again, and pull away again, until the cycle turns blue. Okay? Until it turns a different color, and then we're looking for buying opportunities. Why? Because we're looking at a blue indicator. We're looking at something that's bullish. So we're looking for the green line to build that separation underneath it. Okay? So in the end, what you end up doing is you end up selling this top, selling this top, selling this top, as long as we're trending. And we're going to labor over that point in a few minutes. Or we end up buying this dip, buying this dip, buying this dip, because we expect that to happen over and over and over again. Okay? That's the game plan. It all exists down here. Okay? Ideally, what we want is everything to be the same color. Okay? MA1 is red. We get a red candle. And we have a cycle that is red. Not only that, if it especially has a nice slope to it, even better. And as long as the market is making lower lows, okay, that is the ideal situation. That puts all the probabilities in your corner when you have that. Okay? And conversely, if we have a bullish setup, then we're going to want a bullish MA1. Okay, we want the blue line to be piercing the BBC and being blue. We'll want a blue cycle, and we'll want the market to come back toward the BBC, touch it, and have a blue candle or a green candle. Ideally, we want everything to be the same color. Okay? Now, there's going to be some cases where they aren't. There's two scenarios when faced with that. When that cycle is this line here, turns a different color. Okay? Two outcomes. One, it's going to be a big fat disqualifier. We're not going to take a trade at all. But number two, if it is present, there actually is a trade opportunity if we get hit with that. And I'll show you how to do that. Okay? But again, you want everything to be the same color. And remember, every trade is going to have a stop loss attached to it. It's going to have an 8-tick stop attached to it. So if you're brand new, if you're dead wrong on the trade, if you're trading the crude or the gold, you just lost $80 a contract. If you're trading the S&P and the soybeans, that's closer to $100. If you're trading the mini Dow, that's closer to $40. Okay? And along the way, like I said, you're going to be trailing the stop, trailing the stop, trailing the stop. So if today is your first day, here's what you're signing up for. You're on a 4-tick range chart, so you're going to be looking at the market under a microscope. So you're going to have to be in front of the screens, right? It's rules-based trading, so you'll have to be engaged in what's going on, right? Okay? You're not going to learn to pick the top here, and you're not going to learn to pick the bottom here and trade it from point A to point C. That's not what you signed up for. What you signed up for is to take a piece out of the middle, all right, and trade it from these 2 points. And along the way, you're going to move the stop, move the stop, move the stop, move the stop. Okay, there's going to be a aggressive risk management. So that means, you're on a 4-tick range, probably a lot of trades. You're going to be scalping, right? You're going to have a lot of break-evens. You're going to have situations where the market goes up to your stop loss because you using aggressive risk management and then go down in the direction you actually were in and get frustrated. So you're going to have to spend some time and learn the personality of the market. That's why many of you are here this afternoon. So that's kind of, the stuff that you're signing up for. You're not swing trading here. You're scalping. That's your first order of business. Okay. And you know what? Not only that you're learning that setup, but you also then have to learn how to push the button and execute it, right? On the DOM. That is it. That is the setup. Kind of in slow motion. I think slow motion, but if you have questions about it, again, please pop them in the box. It's all fair game. Okay? Now, we're going to take that and we're going to go to work here and see what we can do. Okay? So the first order of business, okay, before we push any buttons, okay, we need to be trending. We need to be making higher highs. I'm looking at the gold market, and we are making higher highs, right? We got to be excited about that. At least we're trending, okay? Now, of course, my phone started buzzing, so stand by. I'm going to hit the mute button here and get back to you. Okay, I'm back. So Lisa Gold is stair stepping up. We're making higher highs. Okay. Okay. We had the bullish cross here, right? The MA1 is blue and crossing the BBC. Okay. We have a higher high. That's good. What's the normal thing for the market to do? Gravitate toward the BBC or that green line, right? Two things that I want you to do or get in the habit of doing. Number one, the first thing the market needs to be doing is trending, right? Get in the habit of hitting this zoom out button. You need to see a little bit more real estate, okay? Sometimes when you're in the training room and you're looking at Michael's chart, they're blowing up pretty good, okay? So what you might be seeing here is something that is trending or pulling back to the BBC. But if you take a minute and just click out 3 or 4 times, you'll get a larger landscape of what's going on to your left, okay? You might find that we're bumping our head against some resistance that you didn't see in a blown up chart, okay? So number one, get in the habit of zooming out, okay? Identify whether or not we're trending. And you know what? If you have any doubt about it, just stay out. Remember, you're on a 4-tick range chart. You're looking at probably a handful of markets. There's going to be plenty of opportunity to push buttons. Okay, so when in doubt or you're not sure, don't do anything. It's got to be easy and it's got to be obvious, right? All right. So we did get a pullback to the BBC. Okay. Here's the second thing I want you to do. As soon as that cross happens, I don't care if it's a bullish cross or a bearish cross, you better engage the trend line. You see Michael do it all the time in the morning. He's drawing trend lines. He's drawing trend lines. He's drawing trend lines. You have to get in the habit of doing that. If you have DT Pro, just see where my line is, my mouse, left click and engage that trend line button. Okay? The reason you do that is twofold. Number one, what's a normal thing for the market to do? Pull back to the BBC. You know what? Sometimes the market has so much bullish or bearish momentum, it won't get to the BBC. So you have to get in the habit of drawing a trend line in the event that it can't do the normal thing. Because if it does break the trend line without pulling back to this BBC, okay, you might be taking action. And if you get in the habit of drawing the trend line in advance, if it does happen, you're in a position just to move your mouse over to the DOM and left click and take action. All right. So please, after a cross, engage that trend line. Okay, you want to get in the habit of drawing them. Now the question just popped up, how do we draw the trend line? When do you start drawing the trend line? Okay, that is a great question, right? Here's the best way to describe it. Let me find something that might be easier to illustrate. By the way, this is the crude oil. Can you tell we're not trending? Potentially might break out here, then we'll get excited about getting long, but this is not a market that's trending. All right, let me get back to my point here. Let me find it. Of course, now I won't be able to find an easy and obvious one, but give me a sec here. All right. Here's a few. After the cross, okay, like we have right here in the euro, okay? Let me draw that. Number one, here's the cross. It's a bearish cross. So what are we looking for the market to do? Sell off or go down, okay? Number two, are we trending? No, we're not trending. We're sideways, right? And if you're concerned about it or not sure about it, here's some clues. Look at dynamic support and resistance. See how they're side by side? When you're viewing something like this, okay, that's sideways action. You're not pushing any buttons, okay? But we're just reviewing the trend line stuff here. As soon as you get the cross here, we do what's normal. We engage the trend line because that's what we were told to do. It takes two candles, okay, at least two candles to connect the dots, okay? If you have a wick, start at the bottom of the wick. If you don't, draw it at the corner of the body and extend it, okay? Again, the reason you do that is because we never know if it'll get to this BBC, all right? This has bearish separation, okay? Cycle is red and the green line is above. That's the kind of eye candy you want to see when you're looking to get short, okay, this situation. Remember, we want everything to be the same color. Well, we got a red cycle with green separation, okay? The other thing is, if this cycle turns a different color on you after drawing the trend line, okay, the trend line is going to be required before you can take action. If that happens, you're going to have the market close below this trend line before you take action, okay? That was a lot. And I'm afraid I wasn't clear about that, so hold on. I want to find something I could really illustrate this. This would be another example. We expect the market to do the pullback. We get a red, we get an attempt at the green line, the BBC, and we get a down close. Uh-oh, we want everything to be red, right? But this just turned blue on me, okay? If the cycle turns blue on you, the trend line is required. So again, if you already engaged it and you drew the trend line in advance, if you're faced with this and the cycle is a different color but closes on the other side of it, like it does here, all right, then you're in a position again to take action and push the button, okay? So, short answer, get in the habit of drawing trend lines. And you should be doing that as soon as you get the cross, all right? That's the short answer. The reason why we do it, because we don't know if it'll get back to the BBC. What's the BBC? This green line. And if the cycle turns color on us, well, this trend line is required anyways. And then there needs to be, there's going to have to be some things we need to do before we take action there. All right. I drew a trend line. One way to delete it, if you put your mouse over it and right-click and hit remove, that's a great way of doing it. That gets rid of it. Okay? All right. S&P. 4-tick range chart. Are we trending? Double top, double bottom, choo-choo tracks on the right, on the dynamic support and resistance, we're going to look for a better setup, okay? Here's what I'm going to do. I'm going to go inside the DOM anyways, okay? If we get a down close, we will get short, all right? Because I want to show you how to do this in the DOM. So again, as Michael would say, if the high is 22.75, then the low must be 21.75. So if you're going to be proactive, okay, add or subtract 5 from the high, and that's your entry if you want to be proactive. Okay, now, again, we're not trending, so I don't want you pushing buttons on your end, but I'm just doing this for a few reasons. Number one, we have a bearish cross here, right? The MA1 is red and crossing the BBC. Our Ray Rayner cap should be switched to red, and we're looking for selling opportunities, okay? What's also cool about this, the cycle is red. We want everything to be the same color, right? Well, the cycle is red. That is good for the home team if we're looking to get short. The green line, it's also pulling away. So we have that separation, okay? So we have a lot of the variables there. The only thing is we're lacking the trend, okay? Now we had the attempt, okay? Now we're looking for the down close, all right? As I said earlier, we got to get in the habit of doing what? Drawing trend lines, okay? The reason we do that, because we don't know if it'll get to the BBC, okay? Well, it did. Already got to the BBC, okay? Here, the cycle has turned blue on us, okay? Not everything is the same color. The trend line is required, so we need a close below the trend line, okay? We're going to cancel this order. We need a close below this trend line before we can take action, okay? We need a close below the trend line if this turns a different color on us. It has. Okay, so now we're standing at parade rest waiting for this thing to close into the trend line. So let's give it a few seconds here because I'm hoping a few things happen here and I can highlight them, okay? Notice one thing you can do in DT Pro is create a bracket order, and Michael does this on his DOM. In order to create a bracket order, okay, all you have to do is left click on that Tinker Toy triangle. Notice how the bottom of the DOM opens up. Check buy stop and sell stop. And right click over those words and go to factor and ticks. Right click over sell stop, factor and ticks. Okay, down close, right? Okay. So what I did is I went into the DOM and left click. Okay. As soon as I got in, this is our stop loss behind it right here. Okay. Now if the market goes plus 4 ticks in our favor, we're going to move the stop to break even. Okay. What is break even, Bert? Break even is our entry point. Okay. If you're brand new, that's okay. That's where we're going to move our stop down to. Okay. Now, the trade setup says what? The green line is eventually the cycle, right? The green line is going to pull away and then eventually come down and touch the cycle, right? And in doing so, the market is going to make a new pivot low. When these two guys intersect, we're going to get the heck out of Dodge. That's the game plan, okay? Now, when it goes to 26, 21 and a quarter, that's 4 ticks in our favor, we're going to move the stop to break even. So how do we do that? This is our entry, 22 and a quarter. It's up here in positions. Your PNL is moving. It's also highlighted on the chart. Okay? You got 3 different places to tell you where you're short from on the DOM. Okay, and on the chart. Trailing behind it is our stop. It's right here. Okay? It's not in the green, it's in the white. Okay? The way you move it, okay, just put your mouse over it and left click and drag it. Release. Left click over it, drag it, release. That's how you move it. Okay? It's that simple. That's all Michael's doing. Okay? So we're in the trade. Okay, we're short. The stop is right here at 26.24 and a quarter. All right. Again, the reason the market's consolidating here, because we're not trending, right? As I outlined that in the beginning. The purpose of jumping into the DOM is to show you how to push a button in the DOM, how to create a bracket, how to move the stop down. Okay, that's the highlight. And you know what? This is a good lesson. When a market is consolidating and not trending, you're gonna see this type of action. This action, this back and forth, is going to cause you grief. And grief usually means losing trades. Okay? Because what you'll end up doing is overanalyzing it most of the time and just cutting it loose. Okay? Or just taking a loss. Okay? So right now we're hooked. We're short and we have the stop here. Money management rules, again, there's two of them. Because plus 4 ticks in your favor. Okay, so the market's going to have to get to 26.21 and a quarter. You move the stop to your entry point. If it closes on the other side of the MA1, there's that buzzword again, under that blue line here. It's turned blue on us. There's our MA1. We also move the stop to our entry point. That's where we're at in the game right now. Okay, now we're just waiting for the market to do what it wants to do. Okay, so instead of just staring at paint dry here, I'm going to switch guns and go to a different market. We'll go back to this, okay? But again, are we trending? I don't think so. But we made a lower low. No, we didn't. We barely made a lower low. Okay? All right, hold on. I'm going to hit the mute button again. I got to pick up this line. All right. So what was I going to do? Oh, yeah. If we close on the other side of the MA1, we'd move the stop to break even. All right. So let it break down. Okay. 1 second. Now my phone's ringing again. All right, good. We're out of it. So there was it. Okay, I moved the stop down to break even, which was our entry. No harm, no foul. Notice the action. Okay, it's the bullish setup. Okay, we made a higher high. Now we're starting to trend again, right? We made some higher highs. Okay, all right. So something must have came out. I don't know what it is, but that's okay. Let's go over to some of the other markets and kind of dissect these things so we can look at some opportunities. All right, here's gold. Gold is not trending. We have a double top here, right? So we need to make a higher high or a lower low before we can take action. So gold's off the table. Okay. Let's look at the crude oil. Easy and obvious, right? Side by side action. If we're not sure about it, right? Support and resistance dots will tell us a lot. Okay. Railroad tracks, back and forth, no good. Okay. So the crude oil is off the table. Let's go to the natural gas. Okay, here's two good examples right here. Number one, here's the bearish cross. The MA1 is red, crossing the BBC. Step number one is in place. Step number two, engage the trend line. Why? Because that's what we're taught to do. The normal thing for the market to do is pull back to the BBC. There's an attempt here. We didn't touch it, but we got close. In the process, we draw a trend line. Okay? The reason we do that, because we never know if it'll get here. It doesn't and closes on the other side of the trend line. What color is the cycle? It's red. That's what we want. Is there green? Is there separation? Is the green line above? Absolutely. What do we expect the market to do after we enter the market? The green line to get into the cycle, and the market makes a new pivot low. Okay? Guess what? It happens again. Market does the normal thing, pulls back to the BBC, not only touches it, but closes in the direction of the trend. Uh-oh, the cycle has turned color on us, right? This is a blue line. Not everything's the same color. With that being said, as long as it doesn't have a 45-degree angle to it, okay, a close below the trend line with separation, the green line pulling away from it, okay, we expect the market to go down with the green line and make a new pivot low. Okay, two perfect scenarios as far as the cycle and the relationship between the market action and how it tempts to the BBC. Okay. In all honesty, right here, faced with this, would I have taken this? No, I wouldn't have, because we didn't make a lower low. Okay. This one, we were trending. We were making lower lows. Okay. So if it happens again, we'll try to get short. Natural gas. Okay. All right. So hold on. So let's see. Here we go again. Takes two candles. We draw the trend line. Notice how I drew it. Off the wick, corner of the candle. Okay, we're expecting, all right, now this turned color on us, right? We need to close on the other side of this trend line before we can take action. Okay? We will try to get short. If this starts curling up at a 45-degree angle like it is now, then the trade is off the table. Okay? So for the moment, I'm going to table this trade. Okay? All right, so 1 second. My phone's buzzing again. All right, I apologize for that. All right, so we had this, the attempt to the BBC, right? We had the down close. Okay, this was the close under the trend line. Okay, that kind of lit the match, right? The problem is this line turned blue and started curling up on us, right? When faced with this wrong color and turning up against us, that's a big disqualifier. Okay, what that is suggesting is that the market actually is going to do a cycle reset. Okay, that's one of the big traps that people fall into. Okay, they get hypnotized by the close behind the trend line. They look at the cycle. They did all that correctly, but when this starts curling up, it usually means the market is going to trade sideways and potentially higher. Okay? When faced with that, you do not want to be short. When that turns color on you, it's okay if it's flat, but when she starts curling up, you do not want to be trading again, in that direction. against that direction. Okay? So ideally we want everything to be the same color. Okay? That's one of the big traps people fall in. There's basically two of them. One, they get caught up in the chop. And number two, the cycle turns color on them and they get stopped out. Okay? All right. Indices really blasted off, so let's see what the heck's going on here. Something about tariffs. All right. Let's see what happens here. All right, let's see if it sets up here on this pullback. So I'm engaging the trend line. Obviously, we're trending because we're making higher highs. Okay. One second here. Yep, he's flat. It won't pull back. All right. Let's go fishing somewhere else then. All right, so the gold broke down a little bit here. We do have the bearish cross. The MA1 is red and crossing the BBC. If we get the green, if we get the market to gravitate toward that BBC, okay. You notice how I already have the trend line drawn, okay. We'll look to potentially get short the gold. All right, so gold is potential short. I'm going to go to crude. Crude, we have a sloppy cycle here. It's red, it's a different color, and it's at a 45-degree angle against us. So for the moment, we're not going to do anything in the crude oil either, especially not on the long side. Okay. All right, so nothing to do there. Let's go to the euro. Okay. The euro is making higher highs. We had the pullback to the BBC. This was the first close. Notice how the black step line has pierced the BBC. The black step line has pierced the BBC right here with the first up close. That is another disqualifier. No trades. Okay. So again, after the cross, we expect the market to do what? Pull back to the BBC. It does it here. Is that an up close? No. Is this an up close? No. This one is. Where's the black step line? Into the BBC, no trade. Okay, that's the other disqualifier. So basically we have three disqualifiers. Number one, if the market is just trading sideways, you're not pushing any buttons, that's a disqualifier. Number two, as we pointed out earlier in, I think it was the natural gas. Okay, if that cycle turns against you at a different color, on a different color, at a 45-degree angle, that's your other disqualifier. And then the third one we just highlighted in the euro. Okay, when the black step line pierces the BBC, that's happening or happened right here. Okay, three of them. Do you learn those overnight? No. Normally you have to stub your toe before you learn it. Just waiting for this thing to pull back a little bit. I'd like to do that, just to do something here, but I can't. It's just not pulling back. So we'll just be patient with it. Okay. All right. Well, that's the first one. Here's the first pullback, right? And we would draw a trend line. It would look something like that. Okay. Notice this is red and certainly not blue. Okay. There's no separation here. This is the first up close. Okay. Notice how the black step line is piercing the BBC. There's two disqualifiers here. There's nothing to be done here in the ES. Okay. Nothing here. All right. Let me go to gold. Okay. Again, before the gold was trading sideways. We broke it to the downside. We're just looking for the market to do what? VIC, pull back to the BBC, the green line, right? That's the normal thing. In the process, what do we have to do? Get in the habit of drawing a trend line. Okay? So we're waiting for the market to get to the BBC, and we're drawing that trend line just in case. The gold is in a position to fail. So if we can get up there sooner than later, it's going to be a great setup. Okay? Just waiting. So I'm not going to stare at that. Let's go look somewhere else, and then we'll come back to it. The crude needs to make a higher high, right? Or a lower low before we can get excited about taking action in the crude. Natural gas now created some sideways chop. Again, if you're not sure, there's your clue. Okay? Side by side. Nothing's going on there. Sorry. Let's see if we're getting our pullback. All right, let's try to do something here. Okay, if we make a higher high, then we'll look to potentially take action. We have a double top here, right? One here and one here. Let's see. This seems to be the only one that's really moving. Okay, again, we want it to get over here above this high before we get long. So stand at parade rest for the moment. Okay? Might actually get a bearish sit up here if we break down here a little bit. Okay. That's our bearish cross, right? Are we trending yet? No, we have to make some lower lows here. I'm starting to do that now. The cycle looks good, right? But we need to get that green line on the other side, right? Okay. The green line needs to do exactly what it's starting to do now. Okay. Needs to get on the north side of the cycle here. Create that separation. What are we going to do now? Engage the trend line. Okay. Get ready to draw a trend line, right? So hold on. Notice I have my bracket already set up. 8 ticks, 8 ticks. So as soon as I enter, it's going to have a stop loss behind it. All right, now the green line's on the other side. Okay. Takes 2 candles. There it is. The cycle has turned blue on us. Waters down the probability. Not only that, we'll need a close on the other side of the trend line. We got it there. Okay. Sorry, I'm not that quick. Okay. It's right there. I'll do it anyways, just so I can show you guys practice on the DOM. So what I did is I left click to get short. Okay, we're out on the stop there. Okay, we missed it on the way there. Okay, it was just a disaster from the get-go. So what I wanted to do is just, again, show you, if you're going to get short, you're going to left click on the DOM, and then the stop loss is behind it. Okay, that was a hot mess right there. Yeah, we're making lower lows, no doubt about it. Okay. Okay, let's go fishing somewhere else. Note there. All right, so crude. Broke out of that sideways congestion, right? Finally. Okay, now we'll look to take action in the crude. See if it pulls back to the BBC. Notice how I engage the trend line. Zoom out. We are making some higher highs. Okay. Let's see if she pulls back. Okay. Just waiting. No. Okay, let's try gold. Okay. Gold pulls back to the BBC, potentially have the down close here. Okay. All right, 1 second. Okay. This is one of those scenarios where we can be proactive. There's the down close. It's already moved 4 ticks in our favor. So anyways, that was the close there. Okay. Net result is going to be a break even in all fairness. That was the close below. Okay. It was required because the cycle was blue. Okay. It did go down 4 ticks in our favor, even moved below the MA1, but we popped right back up. No harm, no foul. Wow. All right. I'm going to add this. Okay. If the market is moving fast like it is, you can actually change time frames. You can go to an 8-tick range chart. Okay. You can blow it up a little bit. Okay. The same rules apply. The only difference is, okay, instead of using an 8-tick stop, you're using a 16-tick stop. Okay. That's what you're going to end up doing. I think we just did another about face here, so hold on. Yeah, we did. Let me see something real quick. Yeah, that's a pretty big about face off the top. Okay. So you can slow things down by changing the time frame to an 8-tick range. Okay, the same rules. All right. The normal thing for the market to do is to pull back to the BBC. You draw the same trend lines. Okay. That's the close under the trend line. It is required because the cycle is a different color and blue. Okay. The only thing that changes is the risk. Okay. Now we have a double bottom. So if we're going to get short, it's going to have to make a new low before we get short. Okay. Okay. Well, the S&P was breaking, so was the crude, right? The market pulled back to the BBC. This was the first up close. Not only did the black step line pierce the BBC, okay, but you notice how the cycle is red and just looks terrible, okay? A lot of fireworks. All right, let's see what the current... I would like to get at least something done today, but we have so much nonsense going on. Okay, I'm just browsing the market, so 1 sec. Not even the Canadian. We got to pull back to the BBC, potentially get in up close here. But notice how this is red and starting to curl over against us. Okay. This is okay, but when it starts bending over like that, okay, that's a big no. That's a disqualifier. All right. I think we're kind of stuck in with the news that just popped out. I think it's we're gonna well, hold on. No, I'm not even comfortable with the natural gas because we got resistance side by side here. We got a lot of things going on here. We had the bullish cross, right? The MA1 is blue, crossing the green, BBC. You can draw the trend line, top of the wick, top of the corner, okay? The cycle is blue, so it's going to, but we don't have any separation. That green line, okay, needs to be below, needs to be down here. Blue line needs to be extended a little bit, and that green line needs to be south of there. Okay, it needs to look like this. Okay, so we don't have that, even though we have an up close there. Okay, this is sloppy in here. All right, so I think we're kind of going to be stuck in a lot of back side by side stuff and erratic behavior with this news that just came out. So what I'm going to do is I'll shut it down. Okay, that'll give me a chance to actually monitor some risk with this movement. But the idea was this, okay? Number one, I wanted to break down the trade setup for the guys that are brand new, okay? So we went through it step by step, okay? Markets weren't really good today to really show some really good examples, okay? The takeaways, okay? Number one, the first order of business is the market needs to be trending, right? You got to get in the habit of zooming out, okay? This will tell you a little bit more what's going on left of you, okay? More landscape lets you know whether we're at prior support or resistance, okay? Zooming out should be one of your priorities. Number two, after the cross, okay, as we illustrated here, the natural gas, after the bullish cross, your next habit should be engaging the trend line and drawing them. Get in the habit of doing it, okay? We do that because we don't know if it'll get back to the BBC, like this example here. Okay, couldn't get back to the green line. It had so much bullish momentum. And we also do that because if the cycle does turn color against us, well, that trend line is going to be required. Okay, so you got to get in the habit of doing that. Okay, make sure you have your brackets set up. Okay, on the DOM, if you left click on the Tinker Toy triangle, the bottom of the DOM will open up. If you select buy stop and sell stop, and right click over the sell stop and right click over the buy stop, just make these look like 8s in here. What that'll allow you to do is enter the market, and it will automatically place a stop loss behind you. That's one less button that you have to push. Okay, so that'll be flying behind it. Okay, and then from that point on, it's just money management. Okay, gonna have discipline to follow the rules. Okay, that means plus 4 ticks in your favor, move the stop to your entry. If it closes on the other side of the MA1, you move the stop to your entry. Okay, the idea is to get the risk off the table. Okay, don't fall in the habit of not moving your stop. What I see a lot of people do over time is that on occasion the market will come down, knock their stop out, and then go in the direction that they had previously been in. Okay, they would have made money if they didn't move the stop. So the next trade, what you end up doing is not moving the stop. So in the end, those break-evens that you get frustrated with now become -8s, and then you're all turned around, and then you're just frustrated. Okay, you just need to follow the rules. Okay, is there a magic pill you can swallow to force you to do that? No, it just comes within your belly, and you got to find that discipline. Okay, so that's it. We spent an hour going over things. Hopefully it cleared some things up. If you have more questions, you can always call or email me. Every Thursday, we're going to sit in here for an hour and go over the same thing over and over and over again. And hopefully, we flip the switch. All right, something that, a light turns on. Whatever it needs to do to get you back on the path, or to get you on the path, or to keep you on the path. No matter what the deal is, that's why we do this, okay? All right, I recorded it. I'll put it on YouTube in the morning, and then we'll just take it from there, okay? Thanks for hanging out with me for an hour, and I'll see you in the morning in the training room.